All right. Good morning, good evening, everybody. And for those who are joining us for the first time, and just to confirm that you're in the right spot, we're going to talk about US taxes for international entrepreneurs and expats. Welcome to our talk about US taxes for international entrepreneurs and expats. For me, the value, at least I find for myself and as well as feedback from other participants, the true value in this really is in the Q&A. So how we're going to approach it is I'm just going to give a really short talk. I'm probably not going to talk for more than say 20 minutes or so. And afterwards, we'll just open up the floor for questions and answers. If you want to ask a question, feel free to just type it in the chat box and I'll have a look at it once I'm done going through my slides. Or you can unmute your mic at that point in time to ask your question. Please keep your mics muted, especially if you have a lot of background noise for obvious reasons. And with that in mind, let's jump in. So next slide. All right, great. So my name is Darren Joseph, and I'm a part of a tax practice called Moore's Rule in Asia Pacific. As the name suggests, we're based in Asia, and we have 30 offices across 12 countries, so as far north as Tokyo and Beijing, and all the way down to Australia. And I sit in Singapore. I've been based in Singapore for the past 7 years. And as would be the case in a talk like this, it's important to emphasize that nothing that we say here should be construed as advice. We are tax consultants, but we're not yet your tax consultants. We're having a general conversation about general principles. Please don't expect that you sit through a webinar like this and at the end of it, you feel all excited to jump in and do your own tax returns based on what we say here. So please, you need to get advice specific to your situation. And again, nothing we say here should be construed as encouraging you to pay less than your fair share of taxes in a jurisdiction in which you are exposed. So the usual disclaimer, and we have it here in writing as well. So these two guys, I'll come back to them if necessary, and I use them as great case studies because they have been charged formally criminal charges in terms of US tax violations. So we may come back to them as a reference point. But essentially my talk is just gonna be in 3 categories, if you will. So I'm just gonna remind you about citizenship-based taxation. I'm going to talk about the mechanism for policing it, which is known as FATCA, and then some basic responsibilities for US exposed persons who may be abroad. So as you should undoubtedly be aware, the United States practices citizenship-based taxation, which means that even if you have not lived on US soil for years, you may be an astronaut in Space Shuttle Mir, whatever the situation may be, you must file and pay your taxes. So the only way to sever tax residency would be to give up your passport or surrender your green card, but you are exposed to taxation regardless of where you reside. And some people say the US is alone, but depending on your situation, there are a lot of other countries which act similarly. And I'm thinking of the other developed countries, so like European countries, Australia, New Zealand, UK, Canada. You can be in a similar situation, but with those territories, it is possible to sever tax residency without giving up your passport. With the US, that's not possible. The mechanism for policing it, people ask, well, how are they going to know? How is the IRS going to know? Because when you're on US soil, there are checks and balances. So you get paid on a W-2, you get your dividends or interest on a 1099. You get a copy and the IRS gets a copy, so the IRS knows what to expect. When you're abroad, what we have is a worldwide system known as FATCA. Some people think it's a tax, but it's not. It's a framework for information exchange. It's called the Financial Account Tax Compliance Act. It kicked in around 2010, 2011. What it means is that financial institutions outside of the US are required to go through their accounts and identify anyone they suspect of being US exposed. Now, that applies even if the person does not self identify. A lot of us have multiple citizenships. I do, I'm sure many of you do. And even if you use one of your other citizenships to open a financial account, if that bank or financial institution suspects that you are US exposed, they are legally required to still report you to the IRS. So it is something to bear in mind. Please keep that in mind. Freedom of information exchange is not a tax. Next slide. In terms of US persons, I'm talking about US passport holders as well as green card holders, but understand there are other situations or other categories into which you may be US tax resident, even though you're not a citizen. So it may apply to what we call accidental Americans, people who are American by birth because one or both of their parents may be US, even though they were born outside of the US. And those spouses sometimes make an election to file their taxes, to file as if they were a US person as well. So that's something that we could touch on if it's relevant, if it's something that people want to discuss. But otherwise, we're talking about passports and green card holders. So in terms of the responsibilities of a US person, as I said, you need to file and you need to pay taxes when due. People think in terms of taxes, it is easy to think of, yeah, taxes on income, but understand that there are other categories of taxation that may be triggered. So for example, if you give or receive a gift, especially if the person you give it to or receive it from is not a US person, that could trigger a reporting requirement, as well as having financial accounts outside of the US. And I'm talking not just about banks, but also mutual funds or brokerage accounts. That also triggers US filing. What you would find with international tax, and it may be counterintuitive, but the IRS places a greater emphasis on reporting rather than paying. So if you don't pay your taxes, yes, you pay interest and penalties. But if you don't report that you have foreign accounts, for example, that could result in criminal penalties, criminal charges. You could go to jail. So it seems counterintuitive, but information reporting is more critical than just paying your taxes. Information is what the US government is really after. We spoke about FATCA already. And here's where I just summarize what are the basic responsibilities of a US person. So what we've come up with is just like a helpful way of remembering it. So it's kind of like telling yourself to do your best. When you're outside of the US, you need to do your best. So B stands for bank accounts, as I mentioned before. Any financial accounts, so not just bank accounts, any financial account held outside of the US over which you have signing authority. So you don't even need to legally own it. You don't need to be the ultimate beneficial owner. But say you work for a company abroad and you have a senior role in that company and you can sign checks. The fact that you can sign for that bank account, even though it's not yours, it's your company's or your employers, it's the bosses, you need to report that. So B stands for bank accounts. E stands for estimated tax. Obviously, when you're in the US, you get paid each month or every 2 weeks or whatever. And money's being withheld from that paycheck and it goes to state and federal. When you're outside of the US, that doesn't happen, right? So it's your responsibility to calculate what the estimated tax liability may be and report that to the service and to make those payments. If you fail to do that, you may face underpayment penalties. So estimated taxes. BES, S stands for state tax issues. Most states are domicile states. So be careful, because what that means is that even if you're not physically in the state, you may still have certain ties, which means that you would be subject to paying taxes on your worldwide income as if you resided in the state. So you need to consult with whoever your tax advisor is to make sure you're properly severed ties with your state, assuming that you're one of the many states that does charge an income tax. If you're one of the 8 or so states like Florida, Nevada, Delaware, Alaska, whatever, that does not tax us, that does not do state taxes, obviously not to worry about. But for one of the others, definitely make sure that you're okay with your state. Otherwise, and we've seen it so many times, at some point you do return to the US and the state has a big bill waiting for you. And it's a shock, but it is what it is. Last but not least would be your transfer taxes. What do I mean by that? Remember I said that the US, for international tax purposes, they are especially vigilant with reporting transactions as opposed to just paying your taxes. And that's where transfer taxes really is something to pay attention to. So if you give or receive a gift because you're overseas, you may get a boyfriend, girlfriend, husband, wife, and or business partner, a foreign business partner, you guys come up with a great idea and you transfer money to them, or they transfer money to you to take this idea forward, then that would result in a filing requirement, depending on the threshold, to the IRS. And failure to report a gift could be up to 30% of the unreported gifts. So it's pretty stiff. And then, of course, when you're doing your tax planning, keep in mind that the US does have an estate tax. So it is not something that we like to think about, but unfortunately, it's something that we must, especially when we have family responsibilities. We want to make sure that we don't create a burden to our family members by not planning properly. So that's it. What I will do is stop here and we'll open it up for Q&A. So please feel free to ask any questions. Either you can type it in the box below, or you can unmute yourself and ask questions. Based in Ireland, I'm part of family trust in California that will be resolving in the last few years. How do I get that to Ireland? Sorry, I'm just trying to, I got a lot of messages at the same time. Sorry, I'm just reading the first one. Someone based in a part of Europe, and there's an issue with a trust in a state that'll be dissolving. How do I get that to Ireland? What tax will I expect to pay on each side? Okay, so you're based in Europe and you having a taxable event back in the US. What does that mean? So that means that you're based in Europe, and unless you have one of the special regimes, so many European countries, it can be Portugal, Spain, Malta, France, you know, they are, even London, United Kingdom, they have a special tax regime where you may not have to pay tax on your income that arises outside of Europe or outside of that particular European country. Now that's a special election that you need to make with the help of a tax advisor. If you did not make that very special election, by default, by living in Europe, you are taxing your worldwide income. So you have a conflict, right? Because Europe is going to tax me on my worldwide income, and the US is already taxing me on my worldwide income. The question is, how do I make sure I'm not double taxed? The good thing is that for the most part, there's a system without even the treaties that we can invoke, but without even getting into the treaty, with the tax treaty between a given European country and the US, there's a system called foreign tax credits. So if you have a taxable event in the US gets first bite of that cherry. So the US is going to tax it. And when you file your tax return in whatever country you're in Europe, for example, Ireland, you will record in your tax return that taxes have already been taken out in the US. So, and you get Ireland will give you a foreign tax credit for taxes already paid outside. So that typically ensures that you don't pay taxes twice. Now, what may be tricky is state taxes, because you get tax credits for federal taxes against the liability to Ireland or the UK or to Spain or whatever. But state taxes may be a different question, and that's where you need to speak to your advisor. But in short, once you get the right advice and make sure you do the right thing up front, you're not going to be paying taxes twice on the same income. Okay, I'm just scrolling down. I work as a part-time employee for a small consulting company based out of the US. I work remotely. Is it possible for me to claim foreign earned tax exemptions if I do not stay in the US? So that's a great question. The person who's asking is referring to Section 911 of the US tax code, which allows for US exposed persons who are working outside of the US to claim something called a foreign earned income exclusion plus a housing deduction. But we're focusing on the foreign earned income exclusion. What is it? It means that the first, let's say, $105,000, $110,000 of your earned income will be sheltered from US taxes. Obviously, if let's say you're in Europe, because people are asking about Europe, obviously Europe is going to tax you on all of it. But the United States, if it is that you qualify for the foreign earned income exclusion, you would have to declare the income, but you do not pay taxes on the first 105, 110,000 or so, plus your housing. So it could be as high as like $130,000, $140,000, depending on where you're working, which is a great tax benefit for US exposed persons. And one of the benefits for moving abroad, I mean, we're seeing arbitrage where people are leaving California for Texas or New York for Florida. You could just take it one step further and you leave the US completely. And you get that amazing tax benefit. So it's as much as $150,000 just exempted from US taxes by doing that. Now you qualify for it in one of two ways. The first way is what we call the physical presence test. It's easy to understand. So basically, you spend 330 out of 365 days outside of the US. So basically, you do not spend more than 30 days on US soil. And you qualify for under the physical presence test, and you enjoy the foreign earned income exclusion. Now, if it is, you can qualify under another option, which is for some people more beneficial because you don't have to abide by a strict mathematical count, and that's a bona fide residence test. So bona fide residence is a test of intent. So it's more qualitative than quantitative. So what you're proving to the IRS on a form called a Form 2555, you're proving to the IRS that I am a bona fide resident of Ireland, France, Holland, wherever it is you reside. And I have a place of abode there. I'm renting, I own whatever. And I may have a member of my family there, and I'm working and I'm paying taxes. So when you have basically indicia or indicators that you are a bona fide resident of this foreign territory, the IRS would allow you the foreign earned income exclusion. So even though you work for a US employer, if you are not working on US soil and you're working abroad, you may qualify for that. Now, of course, that excludes US servicemen, that includes embassy staff, State Department, anybody that's working for the government. Even though you're abroad, you don't get this. So ordinarily, unless you're a consultant. But otherwise, yes, you can work for a US employer outside of the US and benefit from this amazing tax benefit. All right, next question. Okay, any more questions?
Yeah, I have a question. I just thought I would do it this way. It's James.
Sure.
You mentioned, renouncing citizenship. You mentioned, giving up your passport. I don't know whether I'll ever do that or not. But one
Sure.
question I have is about that substantial presence test, how it applies in the event that someone does renounce their citizenship. Um, does it, as you know, that has a retroactive look to it, to weight the days for the preceding years. So is there, do those days sort of at the moment that you expatriate, do those count if you're present in the US? Or do you only start the count from the time that you renounced your citizenship?
Okay, so that's a good question. So substantial presence is one of the ways you qualify as a US tax resident, even though you're not a US person. So if it is that you are a US person in the sense that you're a citizen or green card holder, you don't need to worry about substantial presence because you're going to be paying taxes, right? So
Right.
it's a planning point for someone, as you mentioned, like yourself, who may be giving up your passport or green card or whatever. So it becomes something you think about once you've given it up. So once you've given up the passport at the embassy abroad, whichever country you're in, then you need to be mindful about the time that you spend on US soil. And as you intimated, it is a kind of complex calculation. The calculation is triggered if you do more than 30 days within a calendar year, and the look back period is 3 years. And there is a ratio, as you sound as if you're aware of it. So yes, that is triggered when you give up your passport. Does that answer your question?
Well, yeah,
Mhm.
because yeah, you could look at it like I wasn't going to get into the formula, you know, it's not necessary,
Sure.
but
Mhm.
the it's just when is the moment that the retroactive test applies. So and you seem to be saying that you don't worry, as you said, you don't count the days preceding. So you were a U.S. citizen or a green card holder, and so there's a moment in time in which you are now no longer under that regime, and so you have to consider the applicability of the substantial presence test. And you know,
Mhm.
does that at that moment do you say, well, now I have to consider 1 year preceding and 2 years preceding? You know, it seems unfair if you do, right? Because it's
No.
you know, like an overlap of regimes.
Ah,
Uh,
I see what you mean. Okay,
yeah,
in that case, I can clarify. So let's say you were to walk down to the embassy today, and today is the
yeah,
ninth.
right.
Where I am, it's the ninth. I don't know, depending on where you are. So right now it's the ninth of December. So as of the ninth of December, I walk to the US Embassy, I hand over my passport, and I get something called a CLN, a certificate of loss of nationality. So it's going to be stamped, it's effective the ninth of December. Now in 2021, I need to do my 2020 tax return still. So what I'm going to do, because it's the year of my expatriation, I need to do something called a dual status return. Now, this signals to the IRS that for part of the year, I was a US person and you form a Form 1040. So that form would be valid for all my income from January 1st to December 9th, because that's the period of time I was a US person. But the IRS wants to see what your full year position. So it's called a dual status because effective from the 10th to the end of the year, so the 31st, I'll need to file a form 1040. NR stands for non-resident. So they're both going together, and that's a dual status return. I'll also do a form 8854, which is like saying to the IRS, goodbye, I'm gone. So that's like a goodbye return. And that's a calculation. It's a reporting form that basically says I'm gone, but it triggers a calculation if you're what we call a covered expat. And you become a covered expat in a number of ways. Basically, I can get into it if you want, but it's basically meant to target higher net worth individuals, and you pay an exit tax. And that form also calculates what your exit tax may be. So that's it. Now, in terms of the count for substantial presence, that will start in 2021 with no look back, because in 2020 you did a dual status. So that return has already been filed. And I would argue that there should be no overlap. But I see what you mean. So
Yeah.
if I were to do 30 days in 2021, what does it mean?
Yeah, the answer you're giving is, I think, the equitable answer. But I really didn't know how that worked. It's just a question I've had in my mind. As I said, I don't even know if that I'll do it. By the way, I'm not in the United States right now. I'm in Ireland, but I'm not the person who was in Ireland who wrote you. I'm a different person.
Okay.
So
Okay. Gotcha.
okay.
Understood. Okay. Any other questions? I'll check in the box.
Yeah, hello.
Hi.
Hey. Hi, thanks. I'll do the same method since I've got this up. So I guess I have two questions. The first one is, I think, is a bit more pertinent and direct to what you've been talking about. Is both my wife and I are U.S. tax residents. We moved here to Portugal about 3 years ago. So our tax status is back in the U.S. Our businesses are mostly there. I'm starting to do a little bit of work here in Europe with some European clients. I just paid a vendor for a service for a project. He's in the UK, and he wanted to add VAT. So it was a fairly small thing. It was like, 800 euros or something. It wasn't very big. And I said, look, I can do that probably in the future. I budgeted this as my US business. I haven't factored in for this extra 23%, what it was going to be. So he was fine with that. Moving forward, obviously, if I do more of this, how would I, as a US tax resident, obviously in the US, so my video production business, if I contract somebody, I get a 1099 from them. I don't even think about the tax thing. I just give them whatever the budget price was. They file it themselves. They deal with all that, and I register it on my side. It's a little different, obviously, in Europe. There's always adding VAT on services. So I guess the question is can I, as a US tax business, how do I deal with that VAT? If I'm giving my client, hey, this is a budget, and do I think just factor that into the price? I'm going to have to add 20% or so?
That's a great question. So it involves a number of issues. You're based in Portugal, so you're based in Europe. So let's create layers. So on a simplistic level, if someone is a contractor and they are in another European country, they charge VAT, right? Now the layer on top of that is that you're working through a US entity, right? Now, in principle, if you're working through a US entity, they do not need to charge VAT for something that's outside of the EU in principle, right? But you are in the EU. So even though you're in Portugal, and maybe do you have NHR tax status?
No, I'm not. No, I don't have any. That I'm getting to that. That's the second part of my.
Sorry.
Was the NHR part. But I mean, imagine that. Okay, I've been here 3 years, and we have temporary residency. I have a dual British-US, which is why I was able to move here in 2017 when UK was still in the EU. And anyway, so imagine that we'd only been here a month, right? I, barely even gone to the local camera and got my stamp, that saying I was living here. I would do this work, and yeah, I mean, I was, I guess, I was, so I don't have NHR, and I was, I said to the guy, look, just don't even, I'm a US entity. That's what I kind of told him. You don't even have to think about that. I guess they're not, these vendors aren't so used to doing that. Most of their clients are clearly, in the UK or in Europe somewhere. So.
Yeah, so if they're not familiar with dealing with entities outside of the EU, they may not be familiar. But again, I don't know the details, but based loosely on what I'm understanding here, VAT shouldn't be charged on transactions outside the EU But, and here's the but, you are running that company from within the EU. So there's something called nexus, which means that the test basically in most countries' tax code is they ask the question, okay, even though a company is registered in another jurisdiction, where is management and control exercise, mind and management, where critical strategic decisions being made? If it's your company, then the tax authority can make the argument that key decisions are being made from within Portugal, i.e. from within the EU. And Portugal can tax it as a local company, even though it's outside, because you're here. And in that scenario, he is correct in charging you VAT because you're actually in the EU. So there's some layers to it.
Sure.
As with the previous question.
That makes sense, and I guess that does lead on to the NHR question, which in 2 years' time, our 5-year temp residency is up. My son, I want to apply for my son to become a Portuguese citizen. Certainly useful. My wife too. They've only got one passport. So at that point, yes, then that will throw up lots of questions around our tax status. Are we going to really apply for NHR and that kind of thing? So I think that's probably a question that I would take off the table off this call and do one-on-one with a tax advisor. But I don't know if you have any sort of high-level view on that kind of thing.
Unfortunately, the way NHR works is that you can only apply if you have not been tax resident or resident in Portugal for the 2 or 3 preceding years. So you've already been here for a period of time and you'll be disqualified from applying. But aside from that, and I guess it's a principle that many US exposed persons or international entrepreneurs in general, they forget, or probably they don't understand, that it's not only where your company is incorporated, and that applies even if you have something like BVI, Cayman, Dubai, or another really low tax haven. If you are running that company from within another country, it's actually subject to the tax rules of that other country. So yeah. Okay.
Thank you for that clarification.
Sure.
Our lawyer here was not able to understand that or explain that. So
yeah, sorry.
It's okay.
Any more questions? I'll just check in the chat box. Nope. Any more? Okay, that's fine. I think Hannah put some notes in the chat box, including our email address, so as well as our website. So if you want to follow up with a consult or any questions, or if you want to connect with us on LinkedIn, please do so. All the coordinates are in the chat box below. So if that's it, thank you very much. It was good to see everyone, and stay on the right side of the IRS. Bye-bye.
Here are 4 ways we can help you. Number 1, sign up for free webinars on US expat taxes and international entrepreneur taxes at www.htj.tax. Number 2, stream premium educational videos at www.htj.tax. Number 3, contact us for tax optimization consult over Zoom. Number 4, high net worth. We can quote for doing your US international taxes returns. Our books and upcoming event are available at htj.tax. Please subscribe, like, share, and comment below. Email us at help@htj.tax to engage us, to advise on international tax or business matters.